G'day there, traders and friends. Thanks a lot for joining me on this Wednesday afternoon market recap. Across the board, we saw a little bit of weakness, especially during the intraday movements. However, what we do have once again is that second pronounced lower wick. This is the second consecutive series, or the second consecutive trading session where we do have that of a hammer candlestick, and it is showing up very close to our respective support area. The reason why this is so important, especially on the Dow Jones Industrial Average, is because this old pivot over here around 24,750 has acted as resistance on a number of occasions, especially over the past 2.5 months. Pay attention to my screen at the moment. I'm drawing a couple of, or at least 3 points of interest, and really what's going on, especially on Friday and during today's session, is that we are retesting this old resistance area as potentially new support. So although you are going to see the headlines suggesting that the markets are weak, yes, they have been temporarily and very much short term under a little bit of pressure, down 102 points on the Dow Jones Industrial Average. This may potentially be that next green rectangular box where we do see once again a little bit of demand come back into the market, and it may act as that next sort of trampoline or that very definitive support area, which is going to help push these markets on up above their respective short-term resistance areas. You can see on my screen 25,453 on the Dow Jones Industrial Average. So at the moment, and even as at the close on Monday, I'm still not looking at this market as a potential short. We do have a plethora of rising support areas. You can see on my screen right now, we do have this sort of intermediate bullish trend line, which has been helping propel the market higher every time we come on in and get very close to this support area. I have just referenced, of course, this resistance turn new support. And even when I bring up the shorter term types of trends on the market, if we just pay attention to the exponential moving averages, there is a very good chance that we are going to hold at this level. You can see that we haven't actually interacted with the rising 50, but this is the second occasion where we have come on back down. We have tagged, of course, that rising 20 exponential moving average. And the good news is that we actually finished today's candlestick with that of a white candlestick body, which does suggest, one, that of course the close was above the open. This was after a considerable gap down, and of course the failed push to the downside. So we're just going to have to monitor this. I am in, at the moment anyway, about really two minds whether or not to actually bring this bullish trigger down. It does make sense. Over the weekend, we spoke about a bunch of trades, individual trades, to actually form similar candlesticks that's just sort of set up on the Dow Jones Industrial Average as at the close on Monday. But we are going to have to monitor this. It's probably going to play out over a number of sessions. But the good news is that we are seeing buying activity once again on the Dow Jones Industrial Average. And this is really just a continuation off from the discussion that we had as at the close on Friday and over the weekend. The S&P 500, if I bring up the same chart for you can see again, we have another white candlestick body, another gap to the downside, intraday push to the downside, which failed, and we started to see once again buying support very close to that 20. We didn't actually tag the 20 during the intraday session, but this is still relatively healthy, and it sort of fits the narrative, at least, that we could be setting up that of a bull flag continuation. So you can see the similarities between these two charts. Yes, the Dow Jones Industrial Average has pulled on down a little bit deeper, or at least it has corrected a little bit more deeper than the S&P 500, but above all else, they are still very much so bullish, even in the face of what is that of a relatively weak start to the current trading week. The Nasdaq is still holding up around its all-time respective high. 7,747 is where we closed at today. Another white candlestick. However, we are sort of stuck in the mud at the moment. We aren't definitively breaking above this trigger, this breakout point on my screen that I've had here for pardon me, a number of sessions now. But the good news is that tech is still holding up relatively well, and we haven't even seen that 1, 2, 3 back test yet. It may still set up on the cards, but even looking at additional markets like the Russell 2000 and also the transportational average, these markets are not suggesting at the moment that they are even going to enter into that of a back test of their past resistance areas as new support. We are still holding above the exponential moving averages. You can see if I zoom in on the detail on the Nasdaq that we tagged that rising 10, and we're starting to see once again another reaction off from this level. This is the first time we've tagged the 10 exponential moving average since the last trading session in the month of May, really, or really the third last trading session in the month of May. So things are still looking a-okay. We are persisting through that of a little bit of a choppy market, but at the same time, if you're still holding on to swing trades, I think you are going to be compensated once the market does stabilize, once it does really put in or price in at least that short-term next higher low, which is going to be that support area. And then we see the gravitation of buyers just push this market on and up into the future, up into those above mentioned sort of targets, or at least resistance areas that I have referenced a number of times over the past number of months. You can see on my screen 26,309, that's the bottom of the gap. The top is 26,435. I am as serious as you can get when I say the market magnet is going to continue to pull these markets on up higher. Nothing has changed there whatsoever. We are just having to really just sit through the ebbs and flows of the market as we continue to push on up and sort of climb the slope of hope, so to speak. as we drag on up into these resistance areas. Now, a couple of individual stocks, you can see Apple is still pulling back, but it is setting up that of a bull flag type of continuation. The big mover today, by the way, and it wasn't Amazon, even though I am on the chart of Amazon. I will quickly recap this. You can see very similar to the NASDAQ. It is more or less moving sideways over the past 3 sessions, but we still have a pretty relative, or at least decent sort of continuation or signal. We are on low volume on Amazon at the moment, but if I bring up these exponential moving averages, you can see that we are still trying to push off from the rising 10. And really what we're doing is we're just moving sideways until we really begin to interact more so with that 10 exponential moving average. Now, the segue into the next stock was Google, because Google today really went parabolic. It was up another $24.31. This was after that potential back test of that resistance area and also the bull flag. So as you've been listening to this Monday afternoon market recap, you've noticed that I've already used, I guess, the terminology of a bull flag on the industrial average and also that on the S&P 500. It is mixed with a number of individual stocks as well, but you can see for yourself here, Google did break out and it is charging up to our next target area of 1,189. So we've really hit the nail on the head with this individual trade. It did make some pretty decent progress today, and it is charging up until this ultimate target. And this is going to be the all-time high for Google once again, or very close to it. And it's really going to confirm the movements that we're seeing in the NASDAQ, Apple, Amazon, and a lot of these other tech companies that have found quite a decent bid in the market over the past 2 months, as they have stabilized at support and they have been climbing and just rallying really, really nicely over the past number of weeks. Now, outside of this list, obviously, we've got GLD, which is still holding below that trend line. You can see here, we tried to push on down today. We couldn't do that. We have that of a Harami candlestick. It is within all of the previous trading that took place on Friday last week. So we don't really have a definitive signal, so to speak, on what gold is going to do at the moment. But I am paying very close attention to that, and I will bring you an update when we do see some more information. What's interesting, however, is that the US dollar is still coming back on up, and it is still holding just shy of this 95 handle. It's at 94.79 at the moment. And I was speaking over the weekend, pay attention to this, because if we do see that of another pullback, especially from this level, it might suggest that we are setting up that of a double top, and it fits the narrative once again of the consecutive series of macro lower highs. So pay attention to this since the late stages of 2016. Here we are in 2018, the midpoint, and this is really the perfect sort of location on the chart where we would assume for that sort of bearish continuation to really begin from again, or at least to sort of confirm to us that it is still moving in the macro sort of bearish direction. So pay attention to this. It's obviously going to align with GLD and also SLV, which I haven't recapped and won't recap in this particular video. But I just need to speak about that. Outside of our list, the only stock that I'm going to reference as at Monday is JD, because you should be looking to liquidate out of JD at the moment. This is a very bearish pattern at the moment. This is certainly a slowdown candlestick. We do have that of sort of a bearish counterattack at the moment, and this is suggesting, look, there was a lot of, I guess, bullish sentiment to begin today's session. We gapped up quite considerably. We tagged $45. I have referenced this figure 45 as a potential resistance area, and really this is the first candlestick since this candle over here. This was coming down about 10%, if not a little bit more than that, a couple of weeks ago, where we're seeing, well, this is potentially that of where that resistance point, or at least the slowdown of this bullish move, is actually going to really sort of rear its head at the moment. So the handbrake has been pulled on JD as at the close on Monday. And I would suggest anyone still holding longs in JD, it is a very good idea to begin liquidating out of that individual trade. All right, it's been absolutely stellar. But with all trades, there is the end time that eventuates. And JD at the moment is giving us a definitive signal that that is the time, now is the time, and you should be looking to ultimately roll out of any other existing positions that you may still have on the table, and more or less just forget about it, give it a little bit of time, so to speak, until we can continue with sort of a bidirectional trade setup moving forward. Now, just to recap a couple of other individual stocks, Boeing Airlines still hasn't really given us a signal yet. It is a white candlestick, however. There was a gap down, much like the markets today, so we're going to have to keep our eyes on that. We've got Baidu more or less just getting stuck, moving sideways. Caterpillar, again, pushing to the downside, but at the same time, we do have an open gap, and I believe this is going to fill, and it's not only going to fill, but we are ultimately going to break out above these swing highs over the coming weeks if the markets continue to remain bullish. We've got COP. We're still looking at this, holding this support, also these rising exponential moving averages. You can see that we're just resting on that rising 50. Again, very similar to that of Boeing Airlines. We don't have a trade set up on this yet. We need a few more, candlesticks to actually set up before we have a definitive trade. The same on CVX. You can see just here, another inside day candlestick. It's showing up at the right location. And this is something that I am going to sort of tweak over the coming days, and I will give you an update on this. I just want to see a couple more candlesticks, or at least one more candlestick first, prior to actually changing anything on that and sort of speaking about a new setup. One other stock also, which is quite interesting, is IBM. IBM has been pulling back. It's pulled back into this green rectangular box, and this is exactly where we would expect IBM to hold and to reverse and ultimately crack above this swing high and then take us up to 150 and 156. So the beginning of the trade is there on IBM. We do have another hammer at support. You can see sort of the continuation of the signals taking place on the Dow and the S&P. It's trickling into, say, IBM, for instance, and it's showing up at the perfect location as well. So these types of, or at least this type of analysis is overlapping, and this is potentially a very strong buy signal moving forward. So pay attention to IBM. I certainly am. I don't have a trade or an immediate trade set up other than what I spoke about over the weekend. But if we see this pull on back down and then even suggest another sort of, hammer sort of candlestick at support, well, then we can really get quite aggressive in our entry into IBM. Otherwise, just leave it as it currently is. Netflix is something that got very close to our target last week. This was on Friday. We almost tagged 399.29. We spoke about over the weekend, more or less taking profits off the table on this, if not just liquidating out of the trade entirely, because we are very close to that ultimate target. There is a fair chance, obviously, that we will hit this on Tuesday. Who knows, maybe Wednesday, but at the same time, you need to protect your profits on this trade. So it's a good idea, in my personal opinion, to place your stop, if you haven't already done so, below the low of Monday's candlestick, just to ensure that you get out of this for another profit and you put that money in your back pocket. It's not a wise idea to simply leave this without a stop, because who knows, the markets, of course, can always pull on back down, and you never want to have a trade that is profitable turn against you. When it's in your absolute control and power to not let that actually eventuate. So very important there on Netflix. And the last stock here is that of Tesla. We are up another $12.66. However, really we don't have any vested interest in this particular stock. There's a good chance it would actually reverse around 360, but ultimately there is a target and a pivot point up here at 377. It looks as though we are going to charge up on into this. We may have a trade set up once we get up to 377. It might be sort of a bi-directional setup, both bullish and bearish. But really for now, personally, I've got no positions in Tesla. I haven't had any positions in Tesla for maybe 2-3 months now, really since the breakdown or prior to the breakdown over here. Since then, since we've been moving sideways, if I can just bring up my highlighting or sort of illustrating tool here, we really have been sort of staying clear of Tesla, but it has come back to life. It is doing quite good. It's up at 370 at the moment, but we're just going to have to monitor this, be patient, be disciplined, and we'll wait for a trade setup once we have the structure around price action and something to actually work with, because at the moment it is rather being quite erratic. And it's best simply, in my opinion, just to leave it alone and let it sort of shake out, rest a little bit, and then we'll take the bi-directional trade setup probably from that 377, 380 handle on that particular stock there. So be patient with the market. This is the moment of truth, so to speak, on the Dow, and a little less so on the S&P 500. But really, these markets are still bullish, even in the face of what has been that of a rather weak beginning session to begin this week. But I do think that if we can break above the sort of confines of that of a bull flag, we should see price action really begin to rocket to the upside. But first of all, we need to either hold this pivot here, just shy or around 25, and also this bullish trend line if we do see continued weakness, all right? So on that note, everyone, if you have any questions, please email me, success@pivotpoint-trading.com. I'll see you all most likely tomorrow with another market recap. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.